Greetings, members, one and all of the Salivation Nation. Silver investment demand jumped 12% in 2019. Let's explore. Yes, this comes to us from mining.com. And it is quite interesting because this is numbers from last year, which means it'll be very interesting to see what the numbers will be for 2020 here. But this is mining.com. Despite the challenges presented by the COVID-19 pandemic and forecasting silver market conditions over the rest of the year, extended physical demand could drive the metal's price higher in 2020. The Silver Institute suggested in their annual World Silver Survey. Now, as most of you know, I am not a fan of using the word investment with regards to silver because I think that gives doesn't serve the purpose for what the metal does. And what does it do? It does not make us money. No, it doesn't. It is money. It preserves our wealth in the long term. And in fact, many of us, we do concentrate, and myself included, on the price of silver and gold, but really we should be measuring the value in terms of what the metal is, and it is money, and it only produces. There's only so much of it that's produced every year. And unlike dollar bills that are printed ad nauseum and printed like crazy, one after the other, especially this year. And I think that's going to bode well for silver's price, but its value is what we, as members of this community, as silver stackers, place on it. And that's why many of us buy it pretty much at various different price structures. But more on that in a moment here. This is just interesting that we're seeing demand go up for the metal. Last year, global silver demand edged 0.4% higher despite an ongoing global trade war affecting many industries, while silver mine supply declined for the fourth consecutive year, falling by 1.3%. So that's interesting here. This is, again, World Silver Survey, the Silver Institute. I do trust their numbers. Now, they are, obviously, they have a bias because, well, they are in the business of promoting silver. But I do believe that, there are a lot of their numbers they're getting from mining companies and also from the United States Geological Survey and the like. But that is interesting. So demand edged higher and silver mine supply declined for the fourth consecutive year. 1.3% isn't much, and it does not take away from the fact that there's still a lot of silver out there, by the way, too. So I want to preface it by that. But favorable structural changes, such as vehicle electrification and a rebound in the key field of photovoltaics, fueled solid industrial demand, the Institute wrote. Silver investment demand jumped 12%, the highest annual growth since 2015, as retail and institutional investors focused their attention on the long-term investment appeal of the metal. Exchange-traded product holdings stood at 728.9 million ounces at year-end, up by 13%, achieving the largest annual rise since 2010. Now, obviously, that is essentially paper silver, and there's about 850 million ounces of silver mined each year. Money managers, net positions in COMEX futures went from being short over much of 2018 to consistently positive in the second half of 2019. Here is the kicker for those of us who are interested in the physical metal. Coins and metals saw a 13% increase in demand over 2018, rising to 97.9 million ounces, while bar demand remained solid at 80.2 million ounces, the report showed. So there was an increase in coins and metals, essentially rounds, but bar demand remained stable and steady. The Institute said that these were the key drivers for the 15% intra-year rise in silver price to a 3-year high of $19.65 last September. The 2019 yearly average silver price was $16.21, about 3% higher than the 2018 average price. So that should encourage silver stackers out there that we're starting to see silver kind of move up, and also the separation between the paper price and the physical price that we're seeing here nowadays over this coronavirus and the supply crunches. Although many key areas of silver demand, including industrial fabrication and jewelry and silverware offtake, are anticipated to fall solely as a result of global pandemic. The Institute still expects silver physical investment to extend its gains this year. And by physical investment, that means procurement by those of us who stack to preserve our wealth. With a projected 16% rise to a 5-year high as investors rotate out of the equities in search of safe haven vehicles. Mine supply is also expected to continue to its decline, given the temporary shutdown of mining operations in several significant silver mining countries in early 2020. And keep in mind, industrial demand will probably decrease as well, and offset that with investment grade products such as bars, coins, and rounds will increase. In fact, I'm holding in my hand some silver that I bought that is not going to be used for industrial purposes. All that silver is going to be off, and of course, the mining supply down. Well, this silver that we hold in our hands, it will serve one purpose, and that is to preserve our wealth. It will not be utilized for industry. And so will that be able to change the price structure given the demand factors? I don't know. Just to see how the economy, I believe the economy is going to be slow out of the starting gate once everything starts to open up. And that means that there may be some delays before industrial demand picks up again. Therefore, we may see the paper spot price not really go up by a whole lot, but we'll see. But they're saying here that silver price will likely test the $19 threshold again before a year end, said Metals Focus, the research firm behind the Silver Institute report. The firm also expects silver to benefit from bargain hunting and outperform gold later this year on the back of its historically low relative value. You may remember that I've made the prediction several times that we might see silver get above $20 by the end of the year. I've been less likely to make those predictions, last year, but this year it very well could get there because of this. And I think the Metals Focus, who's a research firm behind the Silver Institute, making the $19 call by the end of the year, that seems to be a pretty conservative bet. And they're not outstretching or being crazy with their predictions, and I'm tend to agree with that for sure. There's this little chart here. It's very small to be able to see, but you can see gold demand forecast in the 2020, a global demand forecast, industrial, as you can see, it's about half of it. Investments up for 2020, or will be up for 2020, as they're edging back up there, getting close to back to where it was. It was kind of high in 2015. And of course, the silver price is starting to make its way back up. But again, we're measuring price differently now because there is that disconnect between the paper and physical markets. They will come back together again. I do believe they will as soon as supply chains open back up again. But by the time that happens, the actual paper price could be north of $17 or $18, and then you're talking about basically back where we were before. And so you're paying essentially the same premiums as you were before. But who knows? And demand could increase, especially if gold continues to go up. Then I think that we'll see that power play here. Let's take a look at the metals prices right now. And they are up slightly. Over 1% though across the board, except for palladium. This is over 2%, but still edging just slightly above $2,000 per ounce there. But Gold is comfortably high above $1,700 again. And I'll tell you what, it's getting out of the comfortable territory for many of us to buy an ounce of gold anyway. And silver is comfortably above $15 now. And that's a good sign, especially compared to where it had dipped down to $12, in fact, high $11 back during the sell-off. It's still reeling from that. These are still pathetic prices for silver on the paper markets. And it's going to take, I think it's going to take some time before we see that recovery narrowing that squeeze. But all indicators point to higher silver prices, especially when you see less mining supply. Now, when they're talking about less mining supply up here, it was falling 1.3% silver mine supply. Does that mean primary mining supply, or does that mean as a byproduct of other metals? Well, I think could be for both, considering what's happening, especially if there's less demand for other base metals because of what's going on with the economy right now, which means there may be less silver coming in the market, but less demand also for silver in that scenario. And we'll see how it plays out. Either way, we will press on, but I think should be encourage silver stackers out there to hold on, and and be patient too, because it may take a while, and understand, silver is not about making money, and it's really not even about the price of the metal per se, unless you are just in it for a year or two. If you're in it for a year or two, or 5 years or what have you, I think you're in it for the wrong reason. It's not about coming ahead here and there at any particular time, because it's about essentially, think of it as a savings account. That's what it's about. It's about saving your money, and saving in a money that's slightly less liquid than cash. And not only that particular situation, but if you have to sell it, being prepared that you may take a financial loss. You could take a loss when you sell your silver. Let's say you bought at that high, they talk about at $19 at that particular time, when it got up to $19 last September, and you have to sell it at $16.21, you're losing big time. Plus, that doesn't even account for premiums that you'll lose there too. But that's part of the nature of the volatility of the silver. That's the one downside to silver, is this fluctuation of price, especially recently. I mean, again, look at this line here. It's been a downwards moving momentum since 2011, and it really took a hit at the end of 2013 here, and it did go back up to over $21 in 2016, but ever since then it's been basically down, except for that time when it got up, close to $20 here in 2019. But that was for a very, very short amount of time, and now it's making it's heading back up again, and so this is the time to get in, I think, and buy if you can afford to do so for silver. But that's why I'm a fan of dollar cost averaging. Even though it is definitely good to buy low and sell high, silver's low, and even with some of these premiums, you can find deals out there if you look and search. This is a good time to get in, I feel, for silver. But any time is a good time to get in if you dollar cost average, and if you continue to stack. I've bought silver when it was $4 an ounce, and I've bought silver when it was over $30 an ounce. I stopped buying when it got above, $40 an ounce. I may have maybe bought 1 or 2 ounces at that particular time, but I don't buy. I buy up and down, and that's dollar cost averaging, and that's what it's about. You even it out in the end. You don't make a big purchase, really, even when the prices are low, because whenever you make a purchase of any asset, especially precious metals, but especially the ones that are riskier precious metals like silver, I think is more risky than gold. Always buy it prepared to take a loss at any particular price point. So there you have it. But interesting and encouraging news here for the silver markets. And it'll be very fascinating to see what will happen in 2020 report here from the Silver Institute. I'd like to extend a multitude of gratitude to you all for watching and encourage you to please rate, share, comment, and subscribe.